Yesterday, the euro and the British pound extended gains against the US dollar, driven by the outcomes of major central banks' meetings. As expected, Bank of England policymakers confirmed their intention to keep monetary policy tight to combat inflation, which is still far from the target level. The European Central Bank was widely expected to take a softer stance following the US Federal Reserve, but the regulator expressed the need to maintain tight financial conditions. ECB President Christine Lagarde said policymakers should not get complacent following a recent slump in inflation, highlighting instead that inflation would soon rebound and price pressures remain strong. Against this background, the euro continued its bullish run. Besides, traders digested US retail sales data, which showed a 0.3% increase in November after a 0.2% decline in the previous month. However, the report failed to support the greenback. Today's macroeconomic calendar features a batch of statistics on the factory and services activity from the euro area and its member states, including France and Germany, as well as the UK. Economists predict a slight recovery in PMIs for many European countries, which could back the euro up. Activity in the UK's manufacturing and services sectors is expected to remain above the 50-point threshold, which could push the pound sterling higher. The US is set to release similar data, which is forecast to be quite positive. However, it's not yet clear whether this report will help the greenback recover. If the risk assets fail to hold steady at local highs in early trade, the market will most likely enter a bearish correction, regardless of US statistics. At the same time, the euro and the British pound still have great upside potential. And now let's move on to technical analysis. According to the 1-hour euro-American dollar chart, a false breakout at 1.0879 following the release of the PMI data will create a buy signal, thus pushing the euro up to 1.1016. If the price breaks above the previous month's high and tests it from the top down, the European currency will rise to 1.1058 and even 1.1103. In this area, I recommend going short on a rebound to catch an intraday correction of 30-35 pips. A short position at 1.1016 can be considered in a case of false breakout amid downbeat PMI statistics. If the price breaks below 1.0979, it will be possible to open additional short positions, expecting a continued decline to 1.0947 and 1.0915. At the level of 1.0915, it would be a wise decision to go long on a rebound to make money on a move of 30-35 pips. Going long at 1.0947 will be relevant only amid a false breakout. Speaking of the British pound, if bulls are able to protect their 1.2750, 1.2755 area amid positive data from the euro area, a strong buy signal will be generated. In this case, sterling is likely to climb to 1.2790, a 1-month high. If the price consolidates above this level and tests it from the top down, the British currency will extend gains to 1.2820 and 1.2853. At the mark of 1.2853, traders are recommended to go short on a rebound to catch an intraday correction of 25-30 pips. Short positions at 1.2820 and 1.2790 can be opened only in the event of a false breakout. Alternatively, if the price stays firm below 1.2750, 1.2755 area amid upbeat US data, a downward correction to 1.2722 can be expected. Its false breakout will make it possible to open long positions. In case of a drop to 1.1682, traders may go long on a rebound, counting on an intraday correction of 35-40 pips. Good luck and have a great weekend.